December to me is the most important one just because we've poked to new all-time highs, and now we want to see how the market reacts to it. And
it's that time of the month when we take a look at the charts, and it's going to be a very exciting episode today because gold has hit an all-time high in the earlier part of trading, and we're seeing a good bit of volatility now, and it's sold off throughout the day. But to get an understanding of what's really going on in the charts, we're speaking once again to Chris Vermeulen of the Technical Traders. Chris, welcome back.
Hey, thanks. Good to be back, Dave.
Always good to have you on. Let's get straight into it. Last Friday, we closed basically on the all-time high, just maybe a fraction dollar or two below it. And then when the market opened today, we blew through that. What's going on?
Yeah, well, let's jump to the charts. Let's take a quick peek of what's going on with gold here. Gold has been, let's look at the long-term picture of gold. We'll look at the monthly chart because this will give everybody a really good high-level view of where we're at. So we've seen gold rally up into this area 3 times in the past. Each time we've seen a very big sell-off. The average sell-off has been about 17% from here. Mm-hmm. And if we just look at the 2011 highs, you can see we're flirting with a very important part. This is something I think you and I even mentioned it on our last talk. I'm talking about if gold gets back up to these levels this year, we're probably going to see it pierce to new highs. And then the big thing is what happens after that? Does it get rejected with big selling, just like it has every other time? And at this point, the monthly chart, this is a very, very bearish candle. This candle pattern means price has rallied up and then huge sellers stepped in and crushed the price. And so from a monthly standpoint, if this bar was to hold to the close of the year or even go lower, this is a sign that we're probably going to see a multi-month sell-off again. And what's really interesting is when we broke this high, which is around that 2089, 2090 area, if we look at the intraday chart, we can see where gold, really kind of broke out. It started to run up and then it broke out at this level. And we just saw this huge pop. We saw massive volume. And what's interesting is anybody who is short gold, meaning they're betting on lower pricing, if gold hits a new all-time high, those traders or investors betting against gold are going to have to get out of their position. And so their orders will
stopped out, aren't they? So what we saw last night is probably a really, really big short squeeze there.
That's exactly, I think, what it is. Not only was it a short squeeze, so they have to, their orders get bought back, which drives the market up. They get squeezed out of the market. But then there's also the whole different camp of people saying, well, when gold hits new all-time highs, I'm going to buy. And so they'll have orders sitting there. And so that's what happened. I think as soon as it broke this level, a crowded trade is usually the wrong trade. If everybody's doing it, so the shorts are getting out and having to buy back, if everybody's piling in saying it's hitting new highs, get me in, usually the market's going to go the opposite direction. And this is exactly what we've seen ever since it popped. All the red volume spikes this morning are heavy, heavy volume selling. There's huge distribution going on. Somebody has got a big thumb hitting the sell button and just selling into every wave of buying that there is. So, sellers are back in control. This is a very bearish. This is an emotional. This is a technical. There's a whole lot of different things that came together to create this, what could be a temporary top in gold. Long term, I'm super bullish on gold.
Can we go back to the monthly there? Yeah, I suppose I'll challenge on something here. And I know you're saying this is a very bearish looking candle that we have here. After the monthly close in November was a new all-time high for a monthly close. Isn't that correct? Yep. So we've never closed above the level of 2,000 on a monthly basis. So we got that in November. Now we are only in the 4th of December now. Right, so that's only two trading days. So
it's a short. Yeah,
we've got a lot of time left in the month for a different outcome for this bearish candle at this moment in time. So we could see this move higher also throughout the month of December. That'll be something to watch until we kind of do another update in January as well.
Let me add to that real quick because what's really interesting is there's a couple of layers here I want to show you. So the last time we saw gold consolidate for a year and a half was in 2007. And then just as the what we've seen in the past many times before is just before the stock market and the economy starts to roll over, we tend to see precious metals do really well. Well, gold took off as just before the stock market put in a major top and started to crash, and as it started to crash. And so we could be in this similar phase. We've had a multi-year consolidation, and we might see gold actually rally up. And then we go into what happened in 2008. We go into a financial crisis. We go into a bear market where gold pulled back about 34%. And then it continued on its super cycle to the upside. Right now, I remember back here, we talked about how gold has broken into a new super cycle. This should last 5 to 10 years. But there's going to be bear markets along the way and big corrections, which is what we've been seeing the last couple of years. So this is the nice thing about being a technical trader is we follow price. We don't try and pick market tops or bottoms. We let price confirm, and then we follow that price action. So there is a bullish bias. Obviously, 2 trading days into December. We still have a lot of trading days left. This could close up near the highs and confirm that we've got a new breakout. It might run for another 3, 4, 5 months before, say, the economy tops and gold goes into a bit of a pullback and pause. So, we're definitely in a high volatility state where gold can go either way. And the monthly chart is definitely a very strong indication of, is this a bullish, move that could last several months, or is this a reversal and we actually could see weakness for a couple of months? So December to me is the most important one, just because we've poked to new all-time highs, and now we want to see how the market reacts to it. And
traditionally, would we expect to see a kind of lower trading volume throughout December anyway, because we've got a good number of holidays coming up.
We do, and seasonality wise for gold, we typically see gold pull back right at the very beginning of December. So everything is kind of in line. Gold hit resistance, poked to nominal new highs, selling is stepping in. Seasonality wise, we tend to see gold pull back a little bit. So we'll see if it can get some traction here over the next week, and if it wants to continue to push up. So there's nothing really out of the norm other than, we hit some all-time highs and the shorts got squeezed out, people piled in, and now sellers are jumping in. And we just need to see if it's just a 1-2 day wave of sentiment and extreme volatility, or if like the big money is actually unloading gold into this rally and going to drive it lower.
So what are we looking at in terms of the close of the November candle? If we're to keep an eye on that, and then say, well, we want to see the December candle above that close. So we're about what is that, 250, 255, something like that? No, or higher. 250, 258. So if we're seeing a close in the December 260 or above, we're going to, that's kind of like a positive continuation of that trend.
Yeah, I believe so. I think I think a really bullish sign will be a close above like 2089, 2090 kind of. If we get a December close above that to me is like we've now closed at an all-time high, and we've had a monthly close. But if we stay above November or hold above that near the high of November, it's still a very bullish sign. But to me, a close above 2089 or 2090 is like, okay, it has broken out. It's closed above it on a monthly basis. Technically, we should see like at least a 2 or 3 month rally from here, if not more. So that's the big threshold, is a monthly close above all these upper wick highs. And that'll kind of be the line in the sand for me, saying, okay, it's in rally mode, full on rally mode.
And in terms of target price, then, if we think that this is a breakout now.
Yeah. So if we were to use Fibonacci extension, which I find is one of the most powerful tools, if we take this most recent low, this is really where gold started the big rally up, and we can take these highs, we can take this low, and this will draw where the next resistance levels are. And so if anybody's been following me, we know that if we hit the 618 and pull back or pause, we generally go up and hit that 100% measured move almost all the time. So it's pretty interesting that we did come right up. We pretty much hit that in overnight trading, just the other day. And we could see this pause and pull back for a bit. And the bullish picture is pointing to eventually we're going back up to the 2,500. And believe it or not, we can actually extend this if we wanted to go all the way to the low. This is the most bullish picture, brings us up to 2261 and 2660 more or less to the upside. So it is very bullish, the upside. But we definitely have hit some resistance, and we hit that Fibonacci 618 level, which is a very important spot where typically momentum stalls out and it'll pause for a few bars and then we can see it take off. So everything is still long-term, very, very bullish for metals. And it's just a matter of time. This is a super cycle at play. It can take many years for, each pause and pullback to kind of unfold. And that's exactly what it's doing at this point. Just taking its time.
Now we've seen a new all-time high in gold. We haven't seen the same in silver because silver is still trading basically at about 50% of its all-time high. But talk us through this, because we do see this pattern forming, this wedge forming in silver. What's your expectation here now?
Yeah, I think we're going to see. I think we're going to eventually see them all rally together. But silver is the more speculative play. It's definitely nowhere near the highs. Gold is equivalent to trading up here. Silver is, down 50% or so. It really is just kind of digesting and taking its time. It's built a beautiful multi-year base. I think we're going to see this channel sideways until I think the next major rally in precious metals takes place. To me, gold can rally and move up, and the miners and silver can struggle because they are seen more as a speculative play where gold is the global safe haven. It's a slower moving beast, more stable. And so people put more money into it and they don't really just pull it out. They leave it and they park it there. So gold has a way of holding its value and money slowly accumulating gold, whereas silver and the miners are much more volatile. But at some point, these will pop. And, I think silver will go up and hit that 50 and hit all new all-time highs eventually. But, they're just not showing real life yet. They're not coming to life. The gold miners are struggling. And, we should be seeing the silver and the gold miners outperforming if this was the start of something really, really significant. And at this point, it's still kind of dead money. They're really just trading down and sideways for the last couple of years.
We'll take a look at the miners if you had a chart in a moment. But before you do, I just want to highlight on this chart. If you look at the 2010, 11, 12, you can see when silver gets going, how fast that it actually moves as well.
Oh, man. Yeah, it's exciting. It's a thrill. And really, we're kind of, this whole consolidation, this is a big base. This is kind of something similar. You could argue this is very much so. This section right here is very much so like this section. So if we get the perfect storm and things do take off, silver should be a rocket ship. I always used to call them silver miners as golden rocket ships. They just go straight up and take off. And this is what's really exciting. When you get into the precious metal space, you get into the miners too. This is where they're making hundreds or thousands of % runs, especially if you get into the small micro cap miners. So there's a lot of potential, and I'm waiting and excited for one of these to start, but we're just not seeing it yet. But silver and the miners have a way of playing catch up when the time comes, and we'll catch up and surpass gold percentage gain.
And we're still seeing kind of the 28 level as being kind of key resistance there level on the on silver.
Yeah, somewhere there's a couple different levels. There's obviously 2650. There's going to be this 27 and all up right up in here. There's a few layers.
A lot of congestion in there, isn't there? So we're gonna if we clear that at 20, 29, whatever it is, that's when we kind of know we're off to the races potentially.
Yeah, that'll definitely be like a close above there will be pretty amazing, and that could be the spark of a parabolic rally phase. So it's going to be very interesting to see. I think it's just a matter of time. But it still might, again, be pretty volatile until that happens. And it might drag out another 5, 6, 8 bars from here, which is 5, 6, 8 months. So
let's have a look there at the gold miners while you have them there.
Sure. So as we can see, this is the monthly chart of gold miners, and they are well off their highs.
If you consider the gold hit an all-time high there in the last 24 hours. And we're seeing, we're seeing gold miners at, a fraction of the level that they were at in 2010, 2011.
Yeah,
when gold was significantly lower.
To think that the average investor's down, like if you bought in right at the peak, down 78%. Just to get back to break even is ridiculous. You need to we need a 350% rally to get to those highs. So there's a lot of upside potential, which is exciting. The longer something bases, meaning the longer something trades sideways and forms this kind of dead zone, when it comes out of it, it has huge potential. And this is the same with uranium stocks. Uranium space has come to life. We're actually long uranium stocks, and they've already done this huge cycle, and they're already in like a really strong bullish phase. So I think
do you have a uranium stock chart there? So have a look at it, because it gives you, I suppose, it gives you a sense of what's going on, because we've seen a good strong rally in uranium where it's up, it's doubled over the last number of months, and now we're seeing the stocks starting to take off.
Yeah, so they've been out of favor, and then they just literally nobody wanted. There's no interest in them forever. I mean, this is going back to 2010, 2011. They topped out just like gold did, and now they've put in a base. They've started an uptrend. They had a nice bullish move, and now they're starting to rally. And if you look here, I mean, the amount that has rallied is pretty significant from the lows. I mean, it's up 300+%. It's even rallied even higher. So this is a very strong chart pattern. And I think we're going to see uranium stocks. I think we're going to see precious metal miners do really, really well. This is a strong, you could argue here, like a pennant pause formation. It's already started to break out. It's pointing to quite a bit higher pricing still. Once it starts to break these highs here, I mean, this thing could really pop and take off significantly. So I think these are going to be the sleepers. There's a huge movement towards getting like carbon free or carbon neutral for the planet, and uranium and nuclear plants have been out of favor forever, but now they have these mini nuclear facilities that are like the size of a small house, and they can like power pretty much a state, and they're super controlled, low risk. And I think it's a way that, I think money's already starting to see there's an opportunity that we can go nuclear in a very safe way and power a lot of the Western world. Just is kind of my thinking, but I mean, it could be used anywhere. So some of these investors in these stock charts start to move, and you don't realize why until afterwards. But there's huge demand for uranium, and it's
the other yellow metal, as they say.
Yeah.
But also it gives you kind of a sense of the potential for the gold mining stocks as well. So if we keep a close eye on what's going on in gold itself, if we see that December candle and see how that plays out over the rest of the month and into 2024, that's going to give you, there is going to be more interest that's going to come back into the gold mining stocks as well.
For sure. Yeah, gold and the miners have a very, very bullish long-term picture. I don't think there's a lot of downside. I think it's mostly sideways in time. We just need to burn off before they start, another major push up.
Awesome. Chris Vermeulen, thanks for joining us today.
Hey, thanks for having me, Dave. Always a pleasure.